Good morning, ladies and gentlemen. This is Clueless Trading Frank. It's approximately 9:55 a.m. on a beautiful Sunday morning on a very historic day for the world as President Trump embarks on, in the next couple of minutes, one of his most important and pivotal addresses to the Muslim world, but not just necessarily to the Muslim world, but to the whole world, which is going to begin in a couple of minutes. The replay of that speech I will be posting on the Twitter feed, and I suggest that everyone listen to it and understand the dynamics of global politics and deal making that makes the United States of America one of the greatest nations in the world. And the President Trump certainly has done a absolutely wonderful job, and hats off to him for what his visit to the Saudi kingdom. Saying all that, this is a advanced coaching session for Clueless Trading. I thank everyone for attending this morning. The next 60 minutes will be as powerful as it gets, and I will cover a bunch of topics which will be extremely relevant to every single trader, investor, or anybody who's trying to understand the dynamics of U.S. financial markets going forward. We are not, I repeat, going to get into the nitty-gritty of daily trading. I will cover some of the aspects of trade management. However, those will be, I've covered quite a bit of that, but individual questions on specific trade management will be addressed on a surface level, but not gotten into, because otherwise we'd be sitting here for the next 3 hours, and I'm certainly not prepared to do that, and certainly you guys are not either. So saying all that, the session will begin right now. We have a great group here. This session will be recorded and uploaded to the YouTube channel, and this is and it will be will be available for viewing, this particular session, to all members, because this is a broad overview and forecast of the markets and what we have gone through over the past couple of weeks, specifically last week, and I think it's going to be extremely helpful. Do keep in mind that this session is exclusive. Even though I'm making it open for other members for advanced coaching sessions, and just like anything else, ACS students pay a few bucks to learn the dynamics and the skills of what of trading, and other members should not think should not be riding on the coattails and the backs of ACS students who have enrolled in the 5-pack sessions and such. So I highly suggest that others sign up too. These are extremely helpful, and like I said, do not take advantage of all these great people who are here as enrolled ACS students. Saying all that, full disclosure, this is not for financial solicitation, but for financial advice or solicitation. This is purely for financial education. I just want to make sure that a quick roll call. We have K-Bot, we have Brian, we have my good friend Corey, Golf, Jim, my mentor. Then we have SK, a new member. We have Zubair, another new member, and we shall begin. Want to make sure that everybody has full access to the visuals in the back, and oops, bear with me. There you go, and can listen to the audio. Please hold off your questions as I move forward, because I want to make this as effective as possible. The Q&A, I'll leave it towards the end of the session. So let me just cover a couple of broad points which are extremely critical. Just like any other profession, trading is an acquired skill. Every person has a different personality. Every person has a different risk level. Every person approaches markets and life in a different way. Saying all that, there are certain rules of the game, and there are certain aspects of trading which keep on repeating themselves, because like I've always said, that technical charts, and that's really what we cover with all the fundamental and behavioral background that I cover, is nothing but a manifestation of human behavior. Now, human behavior is in the markets is gets complicated because of the advent and the introduction of high-frequency trading programs and algorithmic high-frequency trading programs, what we know as black boxes, which are nothing but supercomputers programmed by people who in many cases have no idea what stock markets are, but very hardcore programmers, which I covered extensively in the last webinar, who play upon the momentums and the dynamics of technical patterns. So when you look at pattern symmetry, which we're going to cover as we move along this session, they repeat themselves, and the average or any retail human trader thinks that every time there is a drop, every time there's a massive rally or a snapback reflex bounce, as we call it, that it's different. It's not. One of the terms that I coined back in my days on Wall Street for my institutional clients as well as high net worth retail clients was, in life and in trading, every crisis is the same for different reasons. Whether it be the 1996 crisis, what we call the Asian flu, which almost brought down the global economy, when long-term capital, one of the largest hedge funds in the world, blew up on bad bets. Well, that's why accounts blow up, right? Bad bets, and they couldn't move. Whether it be the 1987 financial crisis, that was well before my time. But back to what, when I was fresh, when I was in college, whether it be the crash of 2008, 2009, whether it be the recent crashes, the Brexit, the Trump election fiasco after hours when the Dow was down almost 1,000 points and they had to stop, they had limit down on the futures, means that futures couldn't trade anymore. Whether it be the Brexit, the French exit, the fear before the French elections, whether it this most recent one, let's not forget the Greek crisis, that they thought the world was going to end because the Greeks weren't given aid for by the European Union, or whether it be this most recent one of the FBI fiasco and all that stuff. All patterns are the same. But the difference is that the movements in the market, because of these, and a lot of you new people are not grasping this, that what took months or days now happens in minutes and hours. So I used to say, which my good friend Jim and a couple of people who have known me for many, many years knows, that the faster it happens and the more painful it gets if you're on the wrong side of the coin, the better off it's going to be on the other side. And that's exactly what happened between Thursday and Friday. These type of 400-point drops and 300-point moves higher used to take weeks. But now because of the speed of the machines, it's happening in hours. And it seems like despite all the very precision, and I mean very precise, charts and levels that I'm showing, many of you just are in awe or stunned or just refuse to understand that this will be the norm and has been the norm, what I call the new normal now going forward, and has been for the past 2 years. So why not accept it, embrace volatility and move on? But it seems like many of you just don't get it. So so a good word of suggestion, okay, and friendly a constructive suggestion to all of you is wake up. This is the real deal. If you can't handle this type of volatility, and handling volatility doesn't mean you're supposed to feel good. You're supposed to feel like a sucker punch when the market falls for 372 points, stalls a bit, and then falls again, but hits an exact precise levels that I have been showing for a while on the downside, and then repeated alerts on Thursday and Wednesday, starting off in Tuesday, that the McClellan oscillator was down minus 400. Now, you don't need to know what the heck the McClellan oscillator is, but if you do want to learn, go to Investopedia, learn the exact definition of the term. But when I tell you that it's minus 300 is an extreme oversold level, when I write in simple English that the next 24 to 48 hours, there's going to be a vicious bounce, get ready, start moving in aggressively or whatever, moderately at the lows, and then I see the majority of people sitting around. Well, the punishment of life is the pain of regret, i.e., why didn't I buy it? Why didn't I buy those SPX calls at $4 that went to 16 in a matter of 16 hours between 2 days? Okay, so the pain of regret is far more painful than the pain of sacrifice. And the sacrifice is, guys, and this is life, and the sacrifice is that you have to take in that moment of pain and buy them and scale in as we are dropping, and not just sit there in awe saying, oh my God, this is the end of the world. And I'm talking about buying one call if you need to. At $400, you could have sold at $1,700, or 10 calls at $4,000, you could have sold at $17,000. Look, this is not the first time. I've shown this repeatedly, and most recently since the French elections, since any type of 200-point type of drop. But you know what? It seems like many of you just don't get it. There's nothing I can do. It's you who has to change it. Keep on feeling the pain. Somebody I spoke to, great member, new member, I spoke to on the phone, okay? I said, you know what? If you don't feel the pain, you're not going to make it in this business. Ask a SEAL, ask a Marine, and I have good friends who are Navy SEALs. I've known for many, many years. In fact, one of them is one of my college buddies. They go through stuff that they think they're going to die, meaning like training. That's how the mental capability is built. Now, look, most traders are weak. They're weak because they're just like going with their emotions. They're just flowing around. Wowzers on through 200-point moves up when we should be selling, and just sitting quiet, dead quiet, and just hiding under a bunker mentally, figuratively speaking, you know, on days that the market is on a rampant sort of machine-driven robotic sell mode. But you got to suffer the pain. When you want to make the big money, you got to buy into the heart of the darkness. I'm talking about on the fall side, and I'm focusing on this chart because this is the most recent memory that all of you have. Look, I know market history better than most people, but I'm not going to go back there. I'm showing you what happened last week, starting on Monday, so that it's fresh in your minds, which obviously is fresh in your minds. Because traders have literally like a 2-week mentality, meaning like what happened 2 weeks ago, they completely forget. If I asked you incidents that happened like 3 weeks ago in the market, and these volatility moves have happened many times, but the 372 or 380, 390 point type of drops are less frequent. Okay, they don't remember. It's okay. There's nothing wrong with that. But the point is that try to be more tactical, because the reality is that you will not survive these markets, and it doesn't matter what I teach, and it doesn't matter. There's no perfect trade management. Okay, a good portion of trading is how you react to the immediate situation. How you look at these charts and say, okay, I'm buying here because this is what it's looking like. This is the pattern. He's drawn it to perfection. It is. I'm not going to mince around and say, oh yeah, I kind of gave you a so-so chart. I didn't. Between oil, which I pinpointed at $46, and I told you that by the time the President Trump hugs, and boy, it was a hug. Okay, the lion's hug in the desert kingdom, and I don't care about the Saudis, believe me. Okay. So, but the point is, I told you oil would hit a high, and oil almost hit a high, meaning like it's going towards that $51, $53 from 46. I asked people to play the EOGs. I asked people to buy the GUSH. I would say a good 90% of traders didn't. So it is not what the content and all that delivered. It is what you do with what is delivered to you is what really matters. So again, I repeat, like I repeat to my son, like you know, I'm a father, so obviously I've gone through the battles of life, and I have enough scars to show what I've learned. and how I can better myself every single day. Like I tell all of you again, don't just wake up. Don't keep on repeating the same stupidity and blaming, oh, well, yeah, you know, this option, the premium went down and blah, 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 because you didn't buy at the bottom. You didn't buy even close to the bottom. You were a chaser, just like most of them. That's why you didn't make those Alibaba 2,000% type of moves, because you were a chaser. Because you waited while you felt comfortable. You saw an alert of some sort of other service saying, oh, sweepers are buying this, while we bought 5 points earlier. Well, keep doing that. You'll keep on just being stuck in the same hole. Now, saying all that, sometimes, and this happens to all of us, we try our best and then it still doesn't work. But it's better to have tried and failed to never have tried. Look, I'm giving you the facts. This is not a sermon. And as adults, and some of you older than me, and I'm 90 years old. So some of you are 110 years old, okay? So, all figuratively speaking. So the bottom line is, but I am in body and mind, I'm like a 20-year-old. Listen to my voice. Do I look like my life? The best of my life is in front of me, not behind me. Every day is a beautiful challenge I face. So try to learn from your, not try, learn from your mistakes. Stop repeating the same garbage over and over again. And then looking for, and giving yourself the same excuses to feel a little bit better, like, oh yes, it's really not my fault because, you know, it ate away this little premium, or you know, I came in a little bit too late. I could have done that. Keep on doing that. Yeah, all it does is just make, you know, it just makes your mind mush, and you'll never get there. You won't get there. Now, saying all that, you might have tried your best and it still didn't work. That's fine. Move on. Monday's coming. Another great week coming. Up and down. And that's what we're going to talk about. So my point is that I do my best. And I will keep on getting better, because I am a constant learner of life. God has given us every single morning to be a better person, not a person waking up with fear and excuses. In that case, don't turn the key on in the ignition because your car might blow up. Or don't go to the bathroom because that toilet might attack you. And you don't have a plunger. I'm just kidding. Or don't turn on that coffee machine because that Keurig might just like go, you know, just explode in front of you. If you keep on approaching the market with that type of fear, like that old saying goes, ladies and gentlemen, scared money never wins. Let me give you another thing about markets and trading. And these are actual facts that I have gone through. I still attack every day, but I'm well ahead of most of you guys because I don't make excuses. Okay, is the fact that I lost my chain of thought for a minute. Is the fact that you need to participate. You cannot keep on waiting. And these are not just sayings I say just because I want to make my service look great. That there are no perfect moments. What is a perfect moment? When a market is up 400 points and you're not in a position or not have enough of a position, or sold out way too early because you just because you made a little profit. The trader's worst comment, yeah, I made a little bit. A profit is a profit. That's complete hogwash. A profit is not a profit till you at least get 50% of that big reflex move, up and down, depending on which way you're positioned. So it's not the content, guys, okay? Because there is some serious stuff going on that I am on real time showing you guys 1, 2, 3, 4, and yet it's up to you to do what you need to do. So we're gonna just, you know, enough said about that stuff. You know exactly what I'm talking about. And remember one thing here. Some of you know me well. All right. Many of you don't. The bottom line is the biggest compliment is not that others give you. It is the one that you give yourself for what you have done. In the case of trading, it's the challenge that you face and you say, I did it. So don't, so all I got to say is that going forward, and this week is going to be one heck of a volatile week too, okay, is that it's how to recalibrate your mental state. I can do that for you, okay? Look in the mirror. I don't care how old you are. Look in the mirror and talk to yourself. That's what they do in Marine boot camp. They scream, they shout, let it out. Close your car window and scream because you were a goddamn idiot and you didn't make thousands and thousands of dollars or hundreds of dollars because you didn't do what was needed to be done. Let it out and stop making excuses. I tell myself that. I've sold out early on some things, but I re-enter fast if I see the trend continuation happening fast. Saying all that, this is a very fast market. So if you're sitting in front of the screens and you have the luxury of sitting in front of the screens, and God has given me the luxury of doing that because I worked my butt out for more than 14 years and learned everything that I needed to know and still learning, so I can run and be independent and run my own family trading book and run the service simultaneously to help all of you. Okay, so some of you are sitting in front of the screen, the luxury of doing that. I understand people who are working full-time can't always watch the stuff, so they got to stick with the swing trades. Is it easy? No. But there's real-time tweets going out. So unless you're a plastic surgeon who can't take your scalpel off somebody's face as you're fixing their nose, okay, then you can react. And if you are looking at the screens and you still can react and move on because of all the real precise real-time content going through, then I have nothing to say. That's like really a tragedy, like I put. So this is the last thing I'm going to say. When I push people, I'm pushing myself. I'm trying to help all of you. I'm trying to be a real coach. And believe me, I'm not a coach. I never wanted to teach anybody anything anyway, because I'm a man of few words when it comes to explaining the technical stuff. But I have to elaborate. Sit here for the next hour and explain to all of you 1, 2, 3, 4. It's made me a better person. I think it's taught me more how to focus more on my chart and stuff, because my charts, I know what I'm looking at and they're talking to me. Sometimes they're screaming at me. Sometimes they're kicking me. But now all of you, and I'm trying to walk you guys through, because look at each of my tweets. They're not just one line, one word. They're a bunch of words. Okay? Like I expect a little pullbacks. I wrote SPX ESF futures Monday reset pullback price target 2374, 2375. Meaning that, what do you mean meaning? I mean, you guys speak English. If you don't, go back and learn English, please. And upside into May 26th intact, meaning into Friday, obviously, for now, over 2366. Meaning if we stay over 2366, we're going to basically, the upside is intact. Now, what service constantly teaches you online? I mean, literally, as these charts are being put, as alerts are being put, what service actually writes them down in plain, simple, 8th grader English? And then somebody tells me, oh, I really don't understand what you're putting through. Come on, guys. This is borderline asinine. You know what asinine means? I know some of you might know, some of you might not know. It's spelled ASSININE. Please. I'm a master of the English language. Trust me when I tell you. I know more words in the English vocabulary that some of you never ever even heard. Okay? Part of it is called erudite, being educated, a hunger for learning. So bottom line is, I'm not stroking myself and boasting and all that stuff. I'm telling you the facts, okay? So it is very asinine when I hear somebody, and somebody has a right to ask it. Well, some people might not understand my chart. That's why they're taking these ACS group sessions, a lot of the new members, and my hat's off to them. But when it's written down in plain English, and then they say, well, I don't know, then it's like, I'm just like, you know what, forget it. So when I get tough in the chat room and stuff, it's not there to like, I don't get pleasure out of telling people like, come on, guys, pushing them. In fact, I'm going to do it less because it drains me in the middle of a busy trading day when I'm running my own book, when I'm putting it through. My involvement with the chat room will always be there, but it will be minimized because people have to take the training wheels off and start riding the bike on their own a lot. That's when you see the big money coming through. All right, let's move on. Am I clear on that stuff, please? Yes?
Yes.
Oh,
yes, you are.
Good.
Yes.
And again, we're friends, man, And like I keep on saying, many of you, I speak to every single member, free trial subscriber who comes in, okay? Almost all of you are good in your actual lives, what you do, okay? And so your success is already there. Some of you have been successful, made a lot of money in your lives. So apply the same principles in trading. That's all. So let's look at this as to what's going on here and things that I put through repeatedly. Now, once this is done, once we go through the charts and stuff, just take 20 minutes, sometime today, sometime before tomorrow morning, and go through the Twitter feed since Monday of last week and read all the comments that I wrote. Meaning when I'm showing the charts, these are just charts we're going to go through. When I said McLaren oscillator such and such, extreme oversold, VIX, showing here tons of comments that I said, which was clearly saying we are going to bounce. Fibonacci retracements, which we are looking at right now. Read those comments because I can read each single line, through this ACS. Do that. Then it'll all start matching into your brain. So here we are at 2404. Look at this. I'm going to go real basic here. The stochastics. These are the slow stochastics. Now, you don't have to set these charts up. You don't have to look at this on your screens. But I'm setting it up for you with big fat arrows. Can't get any easier than this. So here we are, overbought. Overbought zone, over 80. Simple. Over the blue line, below the red line or close to the red line, it's a buy. A crossover is a buy. But overbought. Look at this. Sudden drop. It started off actually on Tuesday. With the drop. Now in hindsight, it looks like a beautiful inverse head and shoulder pattern. But at this time, we didn't know this pattern was going to take place. That's why I continuously update and alert. But now we can study it and see how amazing these patterns are. So it starts off like this, and then Tuesday night, I believe, or was it Monday night? I think Monday night, when the Comey thing came out, and the media and everyone made the huge deal about it. And again, everyone, it was news. It was a negative catalyst. I even put it out there. This is a negative catalyst. So then the markets basically, and in between, we still had big earnings winners and all that stuff. Don't want to get into it right now. So let's look at this chart here. Once we reach the bottom here, which I had identified on previous charts as a possible bottom, and we're going to go through a few charts earlier so you can see that, then I could draw this absolutely fantastic Fibonacci retracement chart. Fibonacci retracement 178.6. I even boxed these like you box a wager on a horse bet. Okay, 0, that means that's where you start from. Start the reflex bounce. The Oh, and we also shorted the SPX round here. I missed a good portion of this move because it was so sudden, so impulsive, what I call a waterfall decline. But I did post it out there, and we made about 120%, 140%. And some people, and remember one thing, you all know, use my tools to do what you need to do. You don't always have to follow me like I'm some sort of God. I'm not. Okay? And I know some people held the puts. Those, can everyone hear me?
Yes.
Yes.
We can.
Yeah, my thing was beeping. My headset was beeping, so I didn't know. So yeah, thanks, K-Bot. K-Bot said, yeah, Tuesday night when the initial news broke. So you can do it. Sometimes Fish Eyes here, my good friend, sometimes he'll just take look at my charts, look at my alerts, go along with it, and then he'll hold on. And he'll make twice more on that trade. And I, as a tactical trader, thinking, okay, the charts are showing there's a bounce. Sometimes you got to go with your gut feeling. So, and then he'll triple his money while I probably just doubled it. And it's happened before. So other traders should do that. That's the sign of a great member. Somebody who moves with their own gut feelings too. Go along with my trade alerts. They're most of them, I would say, good 80% of them, 90% phenomenal. But then go along also with your gut feeling. Hey, you don't feel with the vibes in the market, forget the technical. Just keep a couple of puts. So Fibonacci retracement was drawn. 23.6%, first move. Look at the candles. I kept on walking people through 1, 2, 3. Here's the crossover. Here it's turning. What's so difficult? It's turning. Then and then comes a reversal of. Sorry. Oh, okay. Then comes a reversal on a reversal candle, because at that point we're overbought again. Market reaches the top on Thursday afternoon. We hit a very pivotal level, which is a 50% retracement. 50% retracement, meaning from the top to the bottom, getting back half of the move that dropped. That's half of the move. Okay? From here to here. Okay? That's half of the move. So if it was 10 here and 5 here, okay? What is it here in value? Can somebody tell me? You gain back half of this large drop. So what is the value here?
7.5.
Thank you very much. So thank you, Golf. So 7.5. So you get a 50% retracement, especially in machine-driven markets, which are very quick, very fast, and impulsive. You will get a 23%, 23.6. So that was your first lot. I sold my first lot there, held on, moved my strikes up on the calls. From 23, I bought in the money down here, if you guys remember. And or 23.50. I mean, these are futures, obviously. So this was more like 23.52, which was the actual lows during live trading hours. So you buy 23.55s, blows through it, hits the mark, hits that level. So you got to sell a bunch. Walk people through it. Then you hit the downtrend line right there. Let me clean this out. You hit the downtrend line. Lo behold, there's a sell. Yeah, I'm watching the volume. I'm watching, So then I'm looking to see what's going on next. Then the market basically comes back a little bit. I realize that a inverse head and shoulder is being created. How many times have you guys? One second here. I just got to save something on top. Okay, good. How many times have you guys seen me post inverse head and shoulder, especially during these dynamic moves, volatility moves? A lot. Okay, so here's a head. The head has been formed. This is not necessarily a double barrel candle. This candle did not form like this. meaning like this was not all green. Okay, in which case it would be a bullish engulfing reversal. It wasn't. It started off with a sputter. That's a sputter. It's like turning your car on. Is it going to start? Whatever. Somebody do a car sound. Okay, and then the next one looks damn good. This is also a follow-through day going on. But except it's not days. These are happening within hours. These are happening within hours. So here's your first follow-through. 1, 2, 3, 4. So the fourth candle, and I've shown the follow-through chart, which was one of my best works just within the past couple of weeks. Everyone knows that, right? Everyone knows that, right? From the last sell-off, the follow-through chart where I said day 1, day 2, day 3, day 4 from the last 2 weeks. Yes? No?
Yes, we remember.
Anyone tell me they don't remember? I have no comment. You shouldn't be at this ACS. I'm serious. Because I've covered it extensively. Day 1, day 2, day 3, day 4. Day 4 is the day that the market has to make up its mind whether it wants to go higher or lower. Day 4 is known as confirmation day. So this is day 4. It was confirmed. Bullish, even though it fell off the 23.6 Fibonacci retracement, it was still a bullish green candle. Day 4. Just don't look at the candles. Look to see what's going on here. This is moving higher. This continues to move higher. Great work. Confirmation day, 4th day. What happens on the 5th day? Complete kaboom. Straight up. 2370. From 2345 on the E-minis or the S&P futures, 2370. 25 points. I'm walking people through all this real time. Now we're just discussing it, but walk through it real time. Then we hit the 50% retracement level, which is standard procedure. Okay? Look at that. What happens at the 50%? There is a reversal hammer, just like magic, just like I said. The market hit the 50%, which I said right here at the bottom. That's why it's so important for you guys to go review. In business, people do that. They go and review their books and stuff, right? In battle, soldiers do that all the time. Generals do that all the time. Marines do that. They go back and review their tactics, what worked, what didn't work. Same thing here. It's not hard because it's already there. All you got to open your eyes and look at it. Grab a glass of wine, grab a Diet Coke, grab whatever you drink. Okay? Sit there and read them. So you review, review back from the bottom what I said, and 50% retracement right there at 2375. I kept on posting. And I know many of you acted on that. That's fine. I'm just explaining. So right at 50%, there's a major, that's a big resistance. So guess what happens? Market comes down. But by that time, I have this downtrend line drawn. As long as the downtrend line holds, because the retest of the downtrend line is critical. It broke above the downtrend line. This is the downtrend line, known as the DT line, right? Downtrend. So this red line has to be tested. If it broke below that, we could have possibly made a big double bottom, which would create a W formation, right? Which should have created, that was the other alternative. We could have come back and retested this 2344 level. In fact, that would have been great, because then it would have solidified the fact that the 2345 on the S&P 500 index futures was the floor. So what am I going to say next? That 2345 possibly can be retested, because it was never retested on the first sharp move up between Thursday and Friday. So this remains open. So if it had done that, then we would have created a big fat W. That is a stronger pattern. This is a very good pattern too, which is the inverse head and shoulder. By now you guys should know head. I kept on showing left shoulder, right shoulder, right shoulder. But the market was strong. And I also said one of the most important critical things about last week, that the markets would generally rally into what? Can somebody step in and tell me? Somebody else, please tell me. Can somebody speak up and tell me what was so important about last week from the bullish side?
Option expiration week.
Nope, wrong. Monthly options expiration. Monthly options expiration, which I have constantly said for years, is generally a bullish biased event. That's exactly what happened. Monthly options expiration. Weeklies are tricky. Monthly options expiration, which falls on the third Friday of each month. Monthly options expiration. So here is another point here, nothing to do with golf here, that if you guys just listen to my last webinar, just listen to repeatedly what I wrote, you wouldn't even have to think, you'd say monthly options expiration. It's not just options expiration. Options expiration in S&P 500 happens on Monday, Wednesday, Friday, over and over and over again. Helpful suggestion. Start focusing. I ask people if they're focused. They say, yes, I'm really focused. They're not. And then I ask a question about where the gap fill is and stuff. They give a wrong answer first time. Then they go, oh, no, it's the other one. Well, if you focused, you would know that I even write it down where the gap fill is. So let's not fool ourselves, okay? I'm not asking you guys to be like robotic, but write down the levels so that, you know, and again, I'm not here for pop quizzes. I'm just asking. I'm just making a point that people are truly not focused, all right? All right, so bottom line is monthly options expiration. That's what happened. Like I said, don't short Mother's Day. Don't short Memorial Day weekend. Memorial Day is what? Next Monday, right? Anybody who's short in the market, you know, after the mini pullback and stuff is an idiot. You do not short Memorial Day weekends. I've been doing this for years. Now, does that mean the market is going to go in a straight line all the way up? No. There's going to be minor retracements along the way, and I'll show you exactly what is a high probability move. I am laying down the roadmap. You do what is necessary. Imagine if I just laid down these roadmaps on these beautiful weekend advanced coaching sessions and then said, okay, guys, see you at the end of the week. I'll try that one day. I know some of you will be fantastic because you'll know what I'm, you know, it's there. So, all right, so you have ahead, the downtrend line retest, very important, and bang, it takes off. Now, I'm just using one chart here, right? I've put together a whole series of them. We're going to quickly stroll through them before the session ends. So because the quad platform showing me something, this is showing me something. Big arrow right there on this minor pullback of the retest. Look, oversold again, turning. Then this big surge comes. This is also known as a Texas bullhorn pattern. Anyone ever seen a Texas bullhorn? I know somebody here lives in Texas. Anyone? I'll show you what a Texas bullhorn looks like, and you tell me if that is what it is. And it's not a joke. Okay, so get ready. 1 second.
I've seen you draw them before, so.
I'll show you one, man. I got it in my icon thing. Who's that? Fish eyes? I mean,
Tom.
swim. Hey, Tom. Got to see it to believe it. I kind of coined the term Texas bullhorn, but it looks just like it. So let's see here.
Hey, Frank, while you're getting that, this memorial might be slightly different because Comey's supposed to give his testimony on that day.
Yes, there will be volatility. There's no question about it. I'm totally with you. I'm just saying that markets, yeah, the testimony is actually after Memorial Day weekend. There's no date set, right? So I'm just saying that this is what a Texas bullhorn looks like. And this is just kind of a simple version. See what I'm saying? So here's your left shoulder, right shoulder, the move that happened to Friday. This is the head. This, ladies and gentlemen, this is the neckline. That's an inverse head and shoulders, an IHS. Think I'm kidding around? That's exactly what it is. Look at this picture for the next 3 seconds. Head, left shoulder, right shoulder. This is where the decline started, and this is where it ended. And let me take this out and bring this back. Bingo. See the symmetry? The head, the ears, the horns. Think it's a joke? I've seen this tons of times of hardcore sell-offs. So now that this is the critical, not critical, but this is obviously the resistance. I have arrows there. Red arrows means where the sells are. Anyone tell me they don't understand that, I have no comment. Okay? White arrows or green arrows are buy zones. So bottom line is at this point we're overbought. And this is exactly what happened. There was a big sell right around 3 p.m. Don't want to get in details of that. I posted that. It's not the end of the world. It's like the smart money, like Clueless A Trading, sold a bunch on Friday and sold along the way. So this is a large sell. Look at the volume. Doesn't mean anything. It simply means, book, nice profit. Let's book it. Book them, Dano. Hawaii 5-0. All right? And then some bears will say, oh, that's the start of the big drop. No, we don't know that. And it's not start of the big drop, because unless we break 2366, which is this channel, these two blue lines, we're still in an uptrend. That's very clear to see. This is overbought on the 1 hour. So it needs to reset. Now, on a strong market, and I've said this before, it can stay above like this and keep on moving higher. It can't go higher than like 100, but it can stay on this higher level. If that's the case, then the market's very strong, Comey or no Comey. And let me tell you what's going to happen on the Comey thing. In fact, I'll save it for a little bit later. You know my predictive game theory. What I've said comes pretty much to the true. I'll tell you what's going to happen on the Comey testimony. All right? Yes, there will be volatility. But this is my hunch, and I'll explain it in a few minutes. So bottom line is that it can stay like this, or it can have a quick reset. That quick reset can bring us down here, which would be great for the limited amount of hedges or puts that I recommended on Friday, which, by the way, were down 40% at the close. Means nothing. I'm going with my charts. They were $3 and change. They were at 2 and change at the close. Does that make me feel like, oh my God, I did something wrong? No. It's a hedge. I have long positions, which I put through. In fact, I have a small S&P call position too, because that's how you manage the thing, both sides. So if it does pull back here, which would be perfect if you ask me, and we get a nice reset like this, bang, like it more. If we have a full scale like golf, if we have, hold on 1 second, I got to take this call. That's coming from Trump. Hold on. Actually, President Trump is very busy because he's given the speech, which I am missing for your sake. But one of his team called up to change a few words, all right? So sorry about that, guys. I multitask. All right, let's move on.
A quick question.
Go ahead.
Can we draw a trend line along the slow stochastics along the bottom of those white lines and use that as a potential target for a turning point?
I'm sorry, draw a trend line from where?
The white at the bottom, the slow stochastics, the bottom.
Oh, like this?
No, from like
No,
the bottom.
I think what he means is there's some positive divergence happen on those white lines on the stows.
Yes.
Oh, like from here?
Yeah, up along all those white bottoms.
Yeah,
enough.
I get it. Yes, you can. Absolutely, you can. In fact, I've done that a bunch of times on the quad charts, if you remember. You know what I'm saying? And you can look at that, and the break of those lines means more sell-off coming.
Okay.
Yep, absolutely. So this is the way it would be drawn for people who are newer, because there's different levels of technicians here, newer members, as well as people like Tom and stuff who are more advanced. You can draw it like that. Let's say, you know. So just like an uptrend line, you can say, okay, the uptrend on that is broken, so it's going to fall more below 60, and then you will see this happen. Everyone clear on that? Now, a couple of scenarios will happen. Either it'll going to break this, and next level will obviously be this 23 Fib again, Fibonacci retracement. Okay, right there, 2360. So this is one possibility. Then we roll around a little bit before we bounce again. The next possibility is that it will break the 2360. All this will happen pretty fast, and that's why keep an eye on my tweets and, you know, do what you need to do. Or it'll break down here and create a sharp bottom at this level, which is a very which is considered to be a strong floor, and then move from here. Okay, if the market doesn't want to go higher anymore, this channel, which is basically the uptrend channel, this one, right? This is the uptrend channel. And this is, again, I'm cutting out all the noise. There's going to be a lot of noise this week. There's going to be Comey. There's going to be the President Trump's visit is just starting with this grand, very successful trip. But the trip is just starting. Next is Israel. Then it's going to be Europe, and then the G7 summit in Brussels. So, you know, it's a lot of stuff. And so we're going to be fielding a lot of what we call tape bombs. In other words, on the old-fashioned way, you know, the news hitting the tape. So, you know, it's just standard, but it's all going to be contained within this chart alone. Within this chart alone. Clueless A Trading E-mini chart, the one that I'm showing, is all going to be contained within that. Or if it's not contained, that means we're going lower. Whichever the case, this is the story. This is an uptrend channel. We'll draw it very simple. Disney cartoon style, okay? So here's your uptrend channel. We break the uptrend channel, we'll create a movement towards this very strong bottom. If this bottom holds, then we're going to move them. That is going to be one heck of a W pattern, kind of a complicated W pattern. All right? So that's it. If that happens, it's going to be fantastic. But there are, you know, headwinds along the way. But earnings hasn't finished. Going to be a big week for retail earnings. Lowe's, Alta Salon, bunch of them. Retail stocks seem to be stabilizing. The worst of the crazy 40% drop on retail stocks seem to be abating. So that's it. That's a nice strong tailwind for the markets to go higher. Then you have oil, strongly strong. $350 billion worth of contract signed with the Saudis to buy armaments. Big push to the defense sector, which is already kind of factored in, but still a huge push. Companies like Boeing, a big Dow component, Lockheed Martin, Raytheon. It's not a joke. So bottom line is that, will this pattern be completed by Memorial Day weekend? Yes, I think that's a good possibility. Can it take a detour here and then move up there? That's a good possibility too. This could happen by Wednesday. Remember, Wednesdays are hump days, right? Those are the days that the market really resets. Did it this week too. Nothing new. Except this was ferocious, which means there was a ferocious bounce. Every action has an equal and opposite reaction. Where did that principle theory come from? Someone.
Newton's law.
Newton's laws of motion. Okay? Every action has an equal and opposite reaction. A body in motion stays in motion. A body at rest basically wants to sleep, just like most traders. Lazy. Seriously. A body in motion, an active body, an active mind wants to move forward. Newton's laws of motion. A body I forget the exact thing, but a body in motion remains in motion. Take a marble and throw it on the floor. See if it goes. Take a marble just sitting there, like what I call SOA, sitting on you know what. Then it just sits there. So bottom line is that these are going to be some fast moves. But all it's going to be contained so far within this. If 2345 breaks, we are going down hard. End of story. But I'll obviously walk through people in that. Let's go through a bunch of charts here. And this is very clear. When stochastics is overbought, I will obviously point it out. But stochastics on a strong market can stay overbought. Okay? Like it was doing here. And but when you get big inflection points like this, down hard, then obviously that's more conducive to a buying environment. So let's get this out. And where is my other folder? Hold on. Got way too many things on my screen. Just bear with me. I don't want to harp on this chart too much and lose people's attention. Done. Okay, that was that chart that I showed. This is another very important chart. This is more for people to understand where the markets are going. This is the channel. All right, here's your channel. 1, 2. Okay, 1, 2. Here's your downtrend line, this dotted line. We broke the downtrend on the 21st of April. Can somebody tell me what this big gap was where we made it, where we made a decent sum of money, and why the markets had dropped prior to that drop? Can somebody tell me?
French elections.
Thank you. Thank you. And everyone should have just piped in and tell me, even new members, because I wrote it a bunch of times, that the 2445 level, 2353, this is actual S&P 500, which is basically 2345 that I showed, was the low. So I'm not going to pick names here, but I know exactly the people who wouldn't know this answer because they didn't read. And then they keep on asking me for, what can I do? What can I do? Well, what you can do is start reading my posts. And if you have difficulty reading the post, feel free to ask in the chat room, or feel free to take English lessons. You think I'm being mean? No, I'm being straightforward. If you don't know how to read English and understand, then no point in being in my service. All right? And that really is a helpful suggestion. I wrote many times French election lows. French election lows. Bingo. Funny how these things happen, right? I said we slipped through the 50-day moving average. Look at that big drop. That's a major technical hit. No question about it. Whichever way you slice it or dice it. I said we would either come down and retest this downtrend line, which is still a possibility, okay, which would create a very large head and shoulder. I mean, it'll create this. Set up for a big move up if this downtrend line holds. Or I said French election lows, and I showed this chart many, many times. Let's go through this quickly. This shaded area is the gap. That's why I put a shade. Let me remind people of something. Doing on real-time charts takes time because it has to be precise. Doing it throughout the day takes a lot of my time. For the few dollars that you guys pay me every single month to cover expenses and stuff and all that good stuff, and pay a little bit for my time and my energy, more importantly my brain, you owe it to yourself to just look at these things as I'm putting it through. If you're not, I don't know. So bottom line is, this is the moving average. It broke all over the media, everywhere. It was just like, oh, you know, 50-day moving average gone. We're going to fall. It's really, really bad. Yes, it looked bad at that time, but I do know one thing, that in a uptrending market, this is a bull market with corrections. 50-day moving averages, when they lose it, they come back on. They try to go back above that. The bears will say, no, it doesn't go above that. Well, no, it didn't go above that. It went above this here, right there, right before the French elections, right there. Here's your red line. It went above that, right? I called it. It slipped below here, back in March. Red line went right above that. Here it went quite a bit below because of all these jitters about, oh my God, what's going to happen? Le Pen's going to win, all that stuff. Valid concerns in the market. Not making light of it. Went above that. Same thing here. Went above that. It took 2 days. Here it went above and then got rejected. But still a bullish candle. Now multiple charts add the story. I said follow through days on one, right? So on the 4th day, the sun, the rally just confirmed. So it went above that, came below that. And somebody who's looking at this chart can look at 2 things. Number 1, this channel, the dotted line, very easy to see. The Darvas box, that's this box here. You don't need to even know what these things are. But if you do want to learn, just go to Investopedia. The Darvas box, it hit the bottom. It filled the gap. Many things happening here. So you got a gap fill. You got a Darvas box retest at the lows, 23.52. You got a retest on the first day of the, and this goes back bunch. That's why this line is put there, of the lower channel. This one. This is the upper channel, right? It got rejected. Nothing crazy, because look at the internals. This was my sign that the markets wanted to go higher. This is a daily chart, ladies and gentlemen, right? And as I've many times pointed out, when on a daily chart, you see the stochastics cross over like that and still remain crossover. What can I say? A market's going higher, Comey or no Comey. Yes, it will have those little pullbacks. Minor pullback, as I said. Did I say there's a major pullback coming next week? No, I said minor pullback. So this, as long as this keeps on confirming higher in between minor pullbacks, we could pull back right here, test again, test the red line and this blue line here, which is 23.65. We could even test 23.60, which is the lower end of the channel. From 23.81 to 23.60 is how many Dow points, ladies and gentlemen? And I want the new people to answer, not the old ones. Sheila, from 23, where we closed at 23.80, let's call it 23.80. If we pull back to 23.60, that's 20 points. How much that is on the Dow Jones Industrial Average? Sheila, you there? Okay, I think she's hiding under a chair. So I'm going to pick Z. Z, if the market falls, S&P 500 falls from 23.80 down to 23.60, which is a possibility to test the lower channel, how many Dow points is that, Z? Another one hiding under the chair. What's going on here? Z, you there? Okay, I'm not going to waste my time. Sheila, you there? Okay. The other new member is K-Bot.
$100 to $120.
Okay, one second. Z climbed out under his chair. Z, next time, please get a headset. Okay, please. So it's 20 points. Yeah, I know it's 20 points. How many Dow Jones points is that? I explained that to you in a couple of ACS sessions, but I'm not going to hammer you on that because, you know, you're new. But 20 S&P points is how many Dow Jones points? Take a rough idea. Thank you. Bingo. He did it. Congratulations, man. That's what I like. 220 points. So even if we drop 120 points, as Zubair, I'm going to just call you Z. As Zubair, he sounds like another, you're a Saudi royal prince or what? Because I think one of them's called Zubair too. Good for you, man. So if you got a couple of billion to spare to his Clue-to-Say trading, hey, my door's open, all right? Please. All right, so 120 points. You're right, 120 points. Okay, SK answered 100 to 120. Where did you answer 100 to 120? I didn't see that. Okay. Okay, SK answered 100 to 122. So great. Both the new members answered. And SK, no, I didn't hear because your microphone's not working, SK. And I, you know, so that's why. All right, so let's move. Did anyone hear SK say 100 to 120 points?
Yes, I heard it.
Okay, I don't know why I didn't hear it because I have it on. Okay, my apologies on that. Excellent. So if we drop 100 to 120 points by Wednesday or by Monday, wouldn't that be a great thing? Here is a quick trick that I'm going to tell you guys. I like Monday, Tuesday type of sell-offs. It sets up for a nice reflex bounce for the latter part of the week, especially on Memorial Day weekend weeks. Memorial Day is a special day. It's a great economic shopping weekend. There will be a reflex bounce, which they might fade because of concerns, as Golf correctly pointed out, for the events after Memorial Day. These are serious events. We don't know what's going to be said at the testimony, the Comey testimony. So the bottom line is markets could be nervous, and this time could be a little bit different, but there will be a bounce. So this, as long as it stays higher, ladies and gentlemen, it's good. That's it. You got to follow that. In between, there are pullbacks, but it's going higher. I did this since pre-French election. What do I care about? No, I do care about, what the French reaction would be. I mean the economic reaction. But when you see this, it bottomed a couple of days earlier. This was the evening, Friday afternoon before the round 1 French elections. Okay? But look what this was doing. It's going higher. The trajectory is higher. That means markets, smart money was betting it's going higher. So there was your signal to stay long or at least have a long bias. Is it possible that it could have come down? Sure, but I'm going with the probability of what I'm seeing. So here it's a strong move, right? The other thing that I showed repeatedly on the daily, when you get oversold on the McClellan oscillator, ladies and gentlemen, by more than 100 points, within a day, you gotta buy the market. Man, I've said that a bunch of times. This last week, McClellan oscillator minus 306. Take it seriously. It doesn't mean you have to put all your chips in, but you gotta be in there. Because somewhere in there is lurking a sharp reflex bounce, as we saw on Thursday and Friday, exactly to the levels that I showed. This is not the first time I've done this. Does this mean the sell-off's over? Absolutely not. So this is now, look how sharp. This was minus 100 Thursday, even with the rally. This rally, there was a rejection of the 50-day moving average. Let me just make this a little bit, zoom out a little bit. Okay, that's better. So there's your channel. This is the channel, right? All that stuff. So on this tail was not necessarily very positive because the rejection of the moving averages of the 34 and the 50. What do you call? Okay, Halo audio is gone. Can everyone hear me?
I can hear.
Yes.
Okay, because I just saw a message on there. Halo audio is gone. Not sure what you're talking about. That's fish eyes. So maybe he's going to sign on. All right. So bottom line is that this is now. You see the trajectory of this. This is your deep oversold McClellan oscillator. So the quick rule of the thumb is if it falls below 100 or below 300 on the 1 hour, as I pointed out, you got to buy. There's a reflex bounce coming. I don't care. It's pure technicals. Here we shrunk dramatically on Friday's rally. Look how much it shrunk. Now when it shrinks, generally what happens? It goes positive, right? So if it goes positive, we are going to hit the upper end right there. And this might happen after a little zigzag. I think that's what's going to happen. Once it gets this close, it normally goes positive. Am I clear on that? Pure technicals. Once it goes this close, it goes positive. The bars go green. Well, not green. Well, I don't have the green thing here. It goes like this. It's like a cosine wave. If anyone took, math, you'd know. So just like that, a wave. So once it gets overbought, that's when people are going to start feeling good. That's when, bang, they're going to hit the market again. So is it possible that we retest this gap here, which is close to 2,400 by Memorial Day weekend? Yes. Will they hit it right after that? Yes. Very, very possible. All depends on how overbought we get. If we get into the 2,400 level, around this, there's a big gap here, then we will basically get overbought. Like, oops, sorry. We'll get overbought like this. Again, same old story. Same old story over and over again. Now, if it goes overbought and stays overbought, that's very positive, just the way it did here. But even when it stays overbought, there's a lot of chop during the day, right? We got to deal with it, and we make money off it. So that's it. Now, let's move on to this chart.
What can you show the cop-off curve a little bit?
Yes. We
haven't looked at that in quite a while.
Yes, I know. I got to start utilizing it. Let me go through this here. This was another phenomenal trading chart, which is still going to be in effect, ladies and gentlemen, for the week coming up. I repeat again, this chart, these are the trading charts. This chart, this one will be showing sort of the broader direction on the daily, and the Fibonacci chart, these two, for some reason the Fibonacci has disappeared off that. Why? One sec. Doesn't matter. So I showed you the Fibonacci on that one. That's sort of the, that's like, this is the naked version of the Fibonacci without the Fibonacci. What does this look like? Does it look like the end of the world? No. This is a exact head and shoulders. Head, right shoulder, left shoulder, right shoulder. Okay? Left shoulder, right shoulder. Here's the neckline breakout. Does everyone see this clearly? It cannot be any easier than this. This is your neckline. You fall below 2375, you're going to come back and retest another 10 points like that. If you stay here, I said 2375 was the test of this neckline. That's the neckline. That's why I feel that we could get like a 6-7 point drop. Whichever the case, is everyone clear about this chart? This is the simplest chart without any lines drawn. Head, left shoulder, right shoulder. Now we are all the way up here now, right? Big red drop. Not the end of the world. If it continues like that, that's rough. So that's why we have hedges. Right there. Left shoulder, right shoulder. Neckline. Any neckline breakout over 2390, we are going to 2400, possibly 2405, where there's a lot of selling happens, right? Is everyone clear on this?
Yes. Do we take the measured move up from the very bottom of the head or from between the two shoulders?
The measured move is basically just a pattern move. So I am looking at it right from the bottom. Okay. As in the measured move of this, as you can see, this is a clear pattern. Okay.
Yes, I was just looking if we were going to go like 2350 to, like, let's say 2385, and then you could expect to move higher.
What you can do is you look at the neckline at 2375. You take the 2345. How many points is that? 30, right?
Mm-hmm.
Okay. Please add 30 to 2375. What is the number?
Okay, right up there at your yellow line at the top.
What is what's 2375 plus 30?
2405.
There you go. Isn't it amazing how these numbers work? It's all mathematical. So the bottom line is that there is a good possibility that this is like a big cup breakout. Okay, this is a big cup breakout. You look at the depth of the cup. Just 1 second, Golf. You look at the depth of the cup. 30 points. Add 30 to this breakout, and guess where you arrive? 2405. That's the actual measured move, but in between it is going to follow these patterns, which is this. It's going to create a small cup like this. And again, I know as for you new members who are listening to this, you don't have to really worry about doing all this constructive charts because I'm already posting them intraday. Then you have another pullback here, but the final destination still remains 2405. Or if we do get the massive volatility because of all these huge news events that are going on domestically, more so because international ones are extremely positive with President Trump's visit overseas, then if the domestic ones hit us hard, then we are going to come and retest 23.45. Yes, Golf, go ahead.
Yeah, my question is, if you was to hit 24.05, isn't there also a case where there's no supply above that and it really could run?
It could really run, but yes, it certainly can. It certainly can. But I don't want to get that. I think that 24.05 repeatedly has been met by ferocious selling, right?
Yes.
So the two ways to look at it is 24.05. There's a couple of things here. This part of the summer is not a bullish time. Just so you guys know that. Okay, this is actually sort of, you know, that old saying, selling may go away. Well, it's still kind of there. So whatever bullish so-called catalyst, I think a lot of it is built into the market. The second reason why I don't think 24.05 is going to break away like crazy. Remember, my price target has been what? Somebody step up and tell me what on the upside I've shown repeatedly. What have I said that SPX can go to?
24.40.
That's on the very high end. On the shorter term, what did I say SPX can go to?
24.20.
Thank you very much. K-Bot, I'll tell you, this lady is just unbelievable. You really remember, you have a great memory, you are a good trader now, you will be an amazing trader. And I will tell you, that's focus. I've wrote it a zillion times, and boy, she was the first one to answer. And 24.40 is on the very high end. Not going to happen in my opinion. So I think 24.20 is max move. You know, as I wrote, max move. And that's a lot. Because what's the next catalyst that's good? What will drive the market is we get some real tax reform proposal, concrete proposal. Then the market can go to 24.60, 24.80 once the market chews into it. So that can happen. But generally speaking, given the way things are right now, and looks like we're not going to get any major tax reform bill before the August recess, then markets will basically hit a max of 24.20 or so. And again, we're not just playing the markets, we're playing a lot of individual stocks, but that is the thing. Now, this is the other trading chart, which you guys got to use extensively. How perfect is this, man? I mean, seriously. You got a gap fill here. Let me just bring it out. 1 hour chart. Okay, so here's the gap. That's why it's a dotted line. See the gap? See the gap? Guess what it did? It came to the lower. It tried to come to the lower end of the gap. This is the actual SPX. The futures did, but not the SPX. So 2376, I've always said, is a major support level. If we break 2376, no, it's not a major support level. I mean, we were down here. But if we slip 2376, we can come down a bit. Whichever the case, we held the gap. We went through the gap like a hot knife through butter, right? And just created. So this is another chart. Look at the channels. Upper gap fill 2400, lower gap fill, which I kept on showing, 2385. We hit right above that, went to this channel. It's all there. Then this 150-day moving average, whatever the case. Look what happened. We are within the channel. Look at that little green bar. You think algos are trading off my charts? Yeah, I think they are. Because look at that little green thing here of a few contracts traded after hours on Friday, just to keep the S&P 500 within this channel. Believe me, it's called painting the tape. They do that. Here's your lower gap fill, 2385. This is it for active traders, a fantastic chart that they can, you know, that they need to monitor. Now, let me just let me try to rush through this thing here. 1 second. What it really comes down to is it's a purely technical market. Pure. There's no two ways about it. And okay, so here's another chart which is very critical to us. Not Google. Google's just another trading chart. This chart, oil. I called it here when they said that oil's going to go to $30, it's going to break everything, blah, blah, blah. I saw that in the massive hammer reversal. You can see that too. That's like a little Chinese firecracker. Go to Chinatown during Chinese New Year celebrations, right? Look, that's a firecracker. So I walked you through hammer, reversal, follow through days. Day one, this was the big crash. Ugly. Was going to the next channel that I had drawn, right? It did that. I thought 42 was going to be the floor. Didn't bother going to 42. Fine with me. Boom. 1, day 2, day 3, day 4. I even put it in yellow, and I even enhanced the size of the font. Fourth day. Whatever happens on the fourth day, and read up, I actually tweeted an article out on the follow-through day. It was devised by IBD founder William O'Neill. It's called the follow-through day. There's many different reasons behind it. On the fourth day, the margins start to abate. Remember the 3-day rule? I know Golf knows that, right, Golf?
Yes, sir.
When after a crash, it's called T+3. Anybody who's been in the market knows what T+3 is and worked on margin. T+3 is the trade date plus 3 days. They give you, the margin clerks give you 3 days to come up with the money or sell some of your positions in order to meet the margin. I remember on our big accounts, we used to go to the margin clerks. Man, we bought them drinks. We used to be the best friends with them. Please give them another day or two. The wire's coming. The wire's coming. Institutional client has $1.5 million margin call. Man, just give him another day. We pleaded with them at 3:30. They were like, nope, that's it, sell. Man, that's it. I'm not buying you drinks anymore. No, all kidding. They normally give you another 2 days, also known as T+5. T+3 is the New York Stock Exchange rule. So after 3 days, if you don't come up with the money on a margin call, then the margin clerks might give you 2 more days. But if it's a large margin call, especially on these type of huge drops, let's say institutional clients can have margin calls in excess of $10, $15 million if it's a very large account, right? Because they are playing on margin too. Hedge funds, boom. The margin clerks sell them within by 3:30, they're gone. That's why you see heavy volatility at the end of the day too. So after 2 days, they might give you 5 days, but guess what? This is T+3. If this is T, this was the T day, right? The trade date when the margin calls really appeared. So T+1 +2 +3. See the magic? On the fourth day, most margins have been, the books are the risk has been minimized on the brokerage accounts or the holding company's books. And on the fourth day, you're ready to go. In the meantime, the internals are clearly telling you that margin or no margin, we bottom. See, you bottom on the day it capitulates. On the day it's blood red. Oil collapsed that night. Collapsed. But overseas markets opened lower. And then look at the size of this candle and of this bar. Huge volume, huge reversal. Nothing more to say. It's amazing that all these gurus and all these other forums, most of them, and on TV media, they still don't see this, and a dumb, clueless 8 trading guy sees this. It just boggles my mind. Who cares? We win. So I showed that. That was the time we made the most on EOG, which is still on a swing trade going higher, and EOG calls went up 600% from here in the next 3 days. Penny. They were like 40 cents. They went to $4, $5. I think it was only like 400%. Huge. Okay, so on the fourth day, once the margins are kind of abated and the books are put in balance, then the market can move. Now, simple. Look at this yellow line. That's the 5-day moving average that I use consistently on my charts. It's heading higher, right? They had one red day in oil. They said, "Oh, that's it. Oil can't go any higher because it hit the moving average, 50-day moving average." Bull, you know what? Because the 5-day moving average continued to go higher. It still continues to go higher. Here is President Trump on his glorious trip to Saudi Arabia and foreign leaders. Oil kingdom. And oil most probably will hit this zone and then get overbought. Or at least hit this blue line here at around 52. So that itself is another tailwind or positive for the markets. Understood?
Yes.
Can you expand the internals a little bit?
There's really not too many internals, but I certainly will. There is, I mean, with oil, I don't really follow the internal that much. I look at the
Okay.
thing. Internals are simply your stows. That's it. That's it. They
Right.
do.
Well, I was looking at volume was decreasing while we were going up in price, and then, but now I see the stochastics. You make a point.
There's volume. Yeah, but oil is very fickle, right? So
Yeah.
don't worry about the volume stuff too much. The real
Okay.
volume was here, right, Tom? So that
Yes.
itself showed that what I was focusing on was the candle formations, the follow through, and the which way the stochastics were going, which is, as you can clearly see, this is known as a gaping mouth. People who have fished, fish like one of those big ones, like what do you call it? I forget, the barracudas and stuff. They have an ugly mouth. This is an ugly mouth. We're saying I want to eat the shorts alive. That's like a like a cobra with a mouth open. All right, look, or a python. This is telling us lot of strength in oil, and I explained the reasons why oil will remain strong. And if you want to know the reasons, which I've explained clearly, has to do with Saudi Arabia and not just Trump dancing. He was dancing with a sword. You see that? I actually posted the video. That's amazing. A good time. So bottom line is, it also has to do with Saudi Aramco, which is going public, the world's largest IPO. So why would they crash oil before that? And the headline this weekend was that Saudis have pretty much confirmed that another 9-month extension of output cuts. So this is going higher. This is bullish. It's a bullish pattern. Now, let's look at this for a second here. Let's look through.
Hey, Clue, also, Cooperman came out this weekend and said he's buying the heck out of oil companies.
Oh, great. I didn't know that. Thank you. Thank you. We need to pile into EOG more. I have the Gush is obviously a shorter term trading thing, and sometimes it's pre-market, just so you know, Golf, sometimes it doesn't reflect the right price, and sometimes even in the early part of the day it doesn't adjust, because it's after all a triple ETF, right? So remember one time you said oil's up, why is Gush down? And then within an hour it went positive, so it's just the way it is. Okay, look at
I found the answer also on that is that Gush is oil companies toward UWTI was pure oil.
Gotcha. Exactly. Okay. Got it. So Gush is, yeah, that's right. That's right. So UWTI is there, and anyone can play any one of those oil ETFs, and you can play USO, whatever the case may be. All right, so let's see some of these charts. This is another beautiful chart, which I do want to point out, that kept me in the game, still keeping me in the game. This is a very precise, this really shows the movements during the day, right? This is your quad algo HFT chart, known as I call it the Quad is the company, QUODD. I highly suggest everyone do a free trial. Whether you sign up or not depends on how much, how well you do with it. But I'll post the link on the Twitter feed. Just call them up to your Clueless Trading, and they will give you a free trial for 2 weeks. It is phenomenal. This way you can see this amazingly precise chart that I use all the time. So here's your big fat gap. We almost got to the bottom of it. This was the French election gap, right? This chart is so mechanical. Now the way I constructed it, here are the consolidation channels, right? Consolidation channels. Here's the other consolidation channel we broke out of. Every single candle is money in my pocket, up or down. Not every single candle, but most of them, right? So end of the day, what happened was I was expecting this 239, 243 to be filled. It didn't do that. It hit the lower gap. Everyone see that? And then there was a big sell. That was a big red candle sell. By the final close, it was here. So is it possible that there is a gap here, that this gap gets filled by early from Monday or so? I would love it. I would buy this gap. If this gap falls, then of course, here's your pivot. Now this pivot is adjusted every single morning, right? So this was the pivot, 236.65s on the SPYs for Friday. So we were well above pivot. So there was a lot of standard deviation. In other words, it moved very fast away from the moving averages, right? But very strong, very strong. This is overbought. This is the caution that I detected. It got it's overbought. It doesn't mean it's just going to reset. If it resets, then we are coming down here before we turn. If it doesn't reset and just stays above the 80 mark, that means we are going to pull back a little bit, and then just move from here. One way or the other, this upper end of the gap, 239.43 or 23.94 on the S&P 500, over a short-term basis, we might get a bump up on Monday morning because of this very positive trip in Saudi Arabia. Oil might spike up $1. Right there is your 23.94, pretty much. I mean, 23. It basically gets up to Friday's highs. So all this I can't explain in one session, all right? You guys have to learn too. So here was the big Comey fallout, big crash. We played this a big reversal candle, which was a fake out. Then came the other sellers. So something else happened here, which has to do with the dollar. The dollar was crashing, and that caused the next leg of the sell-off, which wouldn't have happened. This was the next leg of the sell-off, very fast, all within Thursday, which caused that 370-point drop. Because this green candle that was reversing would have had a continuation. All these you'll learn at your own time when you use your brains more and you're a little bit more advanced in understanding what's going on. So this is a very, very important chart. I even put markers, arrows, markers, big points, big arrows. Can't go wrong. Look at this chart at your own time for at least 10 minutes. Just look at it. Look how precise it is. A gap, dotted lines. The pivot is always in yellow. So when I'm putting this chart out through, you know what I'm talking about. Alibaba, this was the close on Friday. Fine with me. I'll buy it at 120, 127. I won't buy the stock below 119 because at that point it's falling to 113 and I'll short the heck out of it. In fact, I will short the heck out of it if it falls below 121. I am long Alibaba, slightly down on the calls, but so far this is a constructive chart to me. Upper end is 126.87. Nothing to see here, ladies and gentlemen. It's very clear. Big channel. Big money made on this stock. 30-cent options went to $5. Did I hold it all the way from 30 cents to 5? No. Did I sell all the way up? Absolutely. Can't buy 30-cent options calls and in one day have it go up, even intraday, go up to about $1 and then jump to 2, then jump to 3. Well, that pain and punishment of money not being made, don't live with it. Next time, act on it. Same chart showing here. This line is known as the VWAP, VWAP, value weighted average price. This simply shows, showing another version. Nothing to see here. Same chart that I showed. Russell 2000, like it a lot, It's a daily. That's a consolidation thing, consolidation channel. Like it a lot. And you know what drives the Russell 2000? Lots of oil miners, oil companies, especially the smaller ones, lots of biotechs and gold. Russell 2000, U.S. small cap growth. Who benefits most from these huge deals? U.S. companies. And a lot of them are, so any economic agenda, tax reform and stuff, it reflects positively on this. On a technical basis, this is the 1330 lows, in my opinion, are some very strong lows. I don't give a hoot what the big shots on other forums and say about the Russell 2000. We have played this repeatedly with huge success. This type of move here from the 1340 level to 1425, this was back in April, can generate almost 600 to 700% on your money. You don't want to make that? Don't ask me. Even the smaller ones that we played repeatedly from about 1330 till about 1380 can generate 300+%. In fact, the numbers are higher. I'm just giving you a rough estimate. Right now, we are at a beautiful level here. This is the key thing I'm watching. Look at this magenta line. That's a 150-day moving average. Ladies and gentlemen, that's used by a lot of hedge funds and institutional investors to see whether if this breaks, it's normally bounces back above that. But the point is that this is still pointing up nicely. Everyone see that clearly? The RUT IWM, in my opinion, is a solid trade. Got a cost average, manage your trades. But from a swing standpoint, it's a solid trade. So what happens in 15 minutes or during the day is really not my concern. It's for you to manage and cost average or just buy and hold. because one way or the other, it's going to go to 1393 to 1400. And if it breaks that, it's going to hit 1420, which is a kind of a stretch. But is it possible that this pattern gets repeated? If you want to look at pattern symmetry, yes, very possible. And if the Russell 2000 breaks out because of strong economic activity, which is certainly there in the U.S. economy, but the actual fact about small businesses and tax reform, which helps U.S. small companies a lot, then the Russell 2000 is going to break out over 1420. If it breaks below the 1330 level, then obviously it is not good. It is in a wide trading band. If it breaks below that, that means the next level of engagement is going to be 1260. Or more importantly, yeah, 1280 to 1300. This is a good looking chart. A consolidation channel, 2 rapid green candles on the daily swing. Anytime you see daily, it's a swing. This is another beautiful chart on the SPX, and this is the last one that I'm going to cover. Okay, what can I say? I can't get any better than this. I mean, I'm talking chart-wise. I can't deliver anything better than this. This is one of my finest works. And most of you, I don't want to harp on this, did not take advantage of it. So I don't know what to say. It's the pain you're feeling because you didn't make all that money and you still feel like crap because you ended the week not very good. So that itself is punishment enough. I'm not here to punish you. Your own laziness, stubbornness, fear, sheepishness is going to punish you. Nothing to do with me. This is unbelievable. So here's your SPX chart. Look at this big fat red. You think I like red? No. Do you think I put it there to show that that's the major danger sign? Yes. This was right before the French election. Guess where we went? Right close to it. Can you get any better than that? This was the Le Pen loss and the Macron victory. And the markets took it in stride. That was the gap. Back in April. Okay. So that's what it tested. Once it tested this, I knew the bounce was going to be ferocious. I didn't expect it to be this heavy, but then I never expected it to be this fast, but it always amazes me. Machines, no. There is a gap fill here. See in green? If you have kids who are like 3, 4, 5 years old, they will love this chart. They'll actually draw every single arrow without me even drawing it. Guaranteed. Adults seem to have a problem. Well, some adults. So bottom line is there's a gap here. See that? Then there's that big gap here. The Comey fallout, right? Big gap. So we took this gap and we are resting right on it. Well, this was done at 153. See? That's 153. So we actually went up here and tested that. Now this candle was a resting candle, and look, this was at 1:53 2 p.m. By now we are overbought. So we are resting here. If it blows through this gap, simple, it's going to the upper one. See that? Right there. 2400. All-time high is 2406. That's a major resistance, right? Every time we get there, we get smacked. So we'll get smacked again when we get there. How big is going to be the smack? I don't know. But if we blow through here, oh Lord, it's going to be the mother of all short squeezes. And at that point, you want to sell all your longs and you want to basically sit back and say, wow, did it right. But this, look at this chart, gap fill, shaded it. Went through the gap fill. Look at the candles. Once you saw this reversal candle, that was the first sign it's happening. And look what, this was the tell. And I even put markers there. If anyone tells me they can't understand this chart with the markers, again, I have nothing to say other than open your eyes and open your brains a little bit. Look at this. This is the bottom, right? That's the bottom. That's the top. The top sometimes can move sideways, as I said, or it can reset. If it resets, we're going to come down, test the upper end of this gap. That's 2381. These are just a few points. Or we can even come down here and test the right shoulder. Left shoulder, right shoulder, head. The perfect buying opportunity, the perfect moments are here. I alerted those, but no one acts on them. Well, few people do. The perfect moments are not here. Those are sell moments, because that's where the smart money is going to take profit. That's why you got those red candles coming at the end of the day. It doesn't mean we're going to crash and burn. It simply means that big money was made right here. Is it possible that there is this level left to get up here? Absolutely. But in the meantime, we are overbought. We have to be, and we have to move on from there. But gap fills, this is one of the main lessons of today. Gap fills basically means, what are gap fills? The gap fills are basically when there are panic buys and panic sells. That's it. Those are gap fills. Markets gap up, markets gap down. Somebody got trapped and then just got killed. This was the highs, didn't take profits here. Then came the big a real drop, then fake outs, and then the big Comey drop, which was a black swan type of thing, because New York Times and Washington Post seem to be releasing all these leaks consistently. So we don't know, these are, what if something more incriminating comes out? That's it. I'll answer one or two questions and we shall end this session.
Hey, Clue, you were going to give us your Russian theory.
Oh, Comey's theory, right? Yeah, thanks for reminding me. So this is my theory. Comey's testimony will be a positive for the markets. A big positive for the markets. So just like anything else, and I'll explain to you why. Golf knows I know a lot of this crap very, very well. So before, like a slingshot thing, anyone ever use a slingshot? Like it's a Y, right? And there's a rubber band and then it's slingshots. So before the slingshot comes, you have to pull the band back. Okay? You have to pull the band back. I played with slingshots. In fact, when we were up in Maine, we went to Moose Country, right? Lived in Boston for a good portion of my life, so I know New England very well. So I have this slingshot. It was unbelievable. You hit that can take out an SUV. Okay, serious stuff. So markets are just like, they're like a slingshot. Goes higher, has to pull back, scare the living daylights everyone, then goes boom. So before the Comey event, the markets might pull back a little bit. Nervousness, right? The Comey event is going to be a non-event. What's Comey going to say that he hasn't mentioned it? Comey will, in my opinion, say this. He's going to say, yes, he kind of hinted, but I told the president. He kind of hinted, yes, come on, man, this is not worth it. Because, Trump talks, he talks like a New Yorker. Come on, dude, what are you doing? Let's move on. That's pretty much what he said. It's not a criminal event. And the second thing is Comey, as if you read through a lot of the stuff coming out, Comey basically is a very proper, look at him, he looks like a Boy Scout, right? 6'8" Boy Scout. He's from New Jersey, by the way. And so Comey basically felt that the Trump team was just, they didn't know the protocols. There are protocols, right? In government, whether we like it or not. You got to follow the protocol. So he's going to say, yeah, I explained to him all the protocols of how they need to communicate with the FBI. The White House General Counsel is the one who should send requests for information. Mr. President, you can ask me this directly. It is not improper. And Donald must have said, okay, dude, whatever, and he walked away. Now, calling Comey a nut job, is it a criminal offense? No. Come on. Look, I know Donald Trump and stuff better than most people out here. Not only am I a New Yorker, with us Wall Street, the CFO of Donald Trump, who's still the CFO, okay, came to one of the companies I work for, and we raised a lot of money for them. At that time, the Atlantic City expansion stuff, which didn't work out. So investors lost a lot of money. But aside from that, I know how these guys are. They're not crooks. They are New York businessmen. All right? So the bottom line is that unless they find some damning incriminating evidence that Donald slipped a $100 bill in, what's his name, Chesliak or whatever his name is, ambassador's pocket, and say, dude, go to the next strip bar, excuse my pun, it's not crazy stuff. You cannot impeach a president based on, unless you have really hardcore stuff. So the Comey evidence, in my opinion, is going to be very dramatic, volatility, that type of stuff, right? Every single headline coming out will move a red candle or a green candle, but overall, it's going to take away the fear that Comey was actively ready to handcuff Donald. It's going to take that fear away from the market. It's going to put that to rest. And yes, one or two of the compatriots, okay, Flynn, Manafort, these guys are in trouble. They're in trouble. And trouble doesn't mean they're going to be put away to Guantanamo for the next 20 years, but they will be indicted in some one form or another, somewhat. That leaves President Trump's office, White House, kind of finally puts that to rest. Let them fight. They're not in the team anymore, so let them fight it out. So the Comey thing will show that they are more actively involved, okay, with the investigations with Flynn and Manafort than they are with Donald doing some wild stuff with the Russians. That is my opinion, and I can bet that that's what's going to happen. If Comey says, here's the other side of the picture. If Comey says that Donald just completely harassed him, blackmailed him, and all this stuff, I don't think that's going to happen, because Donald Trump didn't do that. He basically said, dude, drop this stuff. Now, yes, you're not supposed to do that. You know, there is a protocol. He's like, you know, drop this stuff, you know, this and that. And but aside from that, there is no massive criminal investigation against Donald Trump, President Donald Trump. There is against Flynn and Manafort and maybe one or two other people who might be within the White House, just like any other thing. And if you study world history, the king shall stand and somebody has to be the fall guy. Okay? During Reagan's time, it was the fall guy was Oliver North. Okay? When they were supplying arms to the Contras and selling arms to Iran. And every president will have a fall guy. There will be a fall guy who will take the fall. It happens in the financial world. It happens in the political world. That's my theory. Got it?
Sir, hey, one quick question. You know, your charts are so perfect. Do you think the pros at these companies have guys just like you, and that's how they program their algos to hit those spots?
Well, the algos guys are algo guys are not market guys, right? So they have a heck of a lot more information in the form of trade dynamics and what trades are being concentrated where. They see a lot more. You know what I'm saying? So they see a lot more. They see the concentration of where a certain expiry is on S&P 500, whether it's at 2370, whether it's at 2360. They are a hacker. They're working with supercomputers that are moving at nanoseconds. Now remember, algos are not one kind. There are the day trading algos, which drive us nuts, and then there are algos which are swing trading. Then there are macro algos which operate off currencies and government bond deals and euro US dollar correlations and stuff like that, oil. So they're all different types of algos. And look, the guys who write algos, I had a neighbor years ago, Russian guy actually. Russians are the best algo writers. One of my friends, he's a huge big shot running one global operations on the operations end, not on the trading end, supports the big time traders. He's a Russian guy, great guy, and very smart. The guy who devised high frequency trading is Indian. Google him. I forget his name. I read on his read part of his book. Like, these guys are out there. So they look at a lot of momentum dynamics. They don't understand the real fundamentals and stuff. Algos cause part of this drop too, because algos read certain keywords. You know how in earnings sometimes they say we are lowering guidance or something like minor. The word lower is considered sell, sell, sell. Got it? And then all of a sudden it turns around and goes higher because something else the algos read. Algos read, you know, all these artificial intelligence machines, they read words. Okay? So they take that word and then boom. And then it goes like that. My charts are good. They can, they're very precise. This week they were like super precise. Now, we don't have we don't have billions that we're trading, right? So the bottom line is that we have to manage our trades, and as long as you understand these charts better and better, and I'm certainly laying them out as clearly as possible, then you'll be able to manage your trades, not worry about what happened in the next hour, you know, whether your options were down from $2.30 to $1.40. Doesn't really matter as long as the directional bet is the same. Okay. Any other questions, Brian? Nope. Okay. All right. And regarding the trade management part, like I said, there's nothing to it. Premium decay, you can't run away from it, Sheila. Okay, you asked me that question. Is there a method of doing it? Yeah, buy these tactical lows and sell before it gets overbought. Simple. You want to buy right towards the end and worry about premium decay. Sorry, you will be punished. Thou shalt, thou has set the rule for algorithmic high-frequency driven markets. Buy too much in one thing, you're going to get punished. Is it an element of luck and speed involved? Absolutely. Lots of luck involved. Yeah, and if you have a lot of options which are expiring a day or so from now or the same day, lumping in too much, then you got to be glued to the screen like a hawk. The minute it gets there, sell. I did that with my Google calls. You can't wait around because these are fast. You blink, they move. So if you be in the flat, if you want to play in the fast lane, you better drive a car with 700 horsepower. And that includes your brain, your charts you're looking at, and how fast you execute the trade. That's the best suggestion I can give you. Any other questions, please?
Hey, Frank, I have one last one.
Sure.
Sorry.
Go ahead. No, don't be sorry.
So let's just say that, you know, you pick something. I'm just saying an inflection point is 2380, and then you said another one is 2370, another one is, you know, down lower. Yeah. Are you buying at each one of those inflection points to where you're hoping?
Nope.
Okay.
Nope, I am buying the directional flow. So here I bought the 2350s and 2355s. The minute it hit this level here, right? I sold a bunch of it and I rolled out my calls as and it's not just me doing it. I do it. Now keep it, I post it directly, rollover profits, right? Rollover profits to a higher strike. I can see the directional flow is higher. So why not take the big profits and then start rolling them out? Now, I also do a lot of fast trades on the side, which I, can't post. It's live trading. Sometimes I'll buy it a little short for an hour and make some money. I try to post the ones which are which people can react to within, with a little bit of time on their hand. So here for example, when I reach this when I hit this lower gap, right? Corey, when I hit the lower gap at 2374, I said sell the 2370s and roll it out to 2380, 2385, right? And that's exactly what I do. I roll them out. So I'm not buying every strike. Remember, how do I know it's going to go there? It's not there till I'm projecting out based on the directional bias on many different things, and I will roll the strike out. If I buy something at 4 and it's at 9, or at 8, I will take that whole thing out and roll them out to a higher strike, which is a cheaper price, right? The option premium is cheaper. If I'm buying 2380, I'll pay $2 for it, and I know that the bulk of my $4 to $9 trade is safe. I shouldn't use the word safe, but at least it's put away, so I can use that again. So that's the best way to do it. It's not really hard. Try it. And I always say, try with one call. So you keep
but how do you do it on the way down, where you got these point of inflections on the downways, where it's going, where you think it might hit it?
Right. So here, for example, this was a sudden thing. I played this. We had calls, which puts that I had recommended the day before, so that was a big gain. But I had sold out a whole bunch of them here, so I really didn't have any puts, to be honest with you. So I got caught with the calls. I made some bunch here. So in answer to your question, how do you play the downside, this type of move?
Yeah, but not just the downside, meaning the downside to where you think it's going to bounce from, and it goes through that point. Are you buying at all those inflection points on the way down, or are you waiting?
Oh no, I'm waiting because I don't know if it's going to come all the way down. So if you're asking me how that I know exactly here that we're going to land up here, I have a projection, but I will, if I feel that it is really going to start doing that, then I will, yes, buy the strikes at this level, given that I don't expect this gap to be broken. Does that answer part of your question?
Yeah. But what I'm trying to say, let's say, for instance, you're at 23.80, and you think the points that it could fall is 23.75, and then another one to say at 23.70, and another one at 23. You know, you're giving your points where you think it might. Are you buying at each one of those, or you just wait until you?
No, I'm not buying each one of them. I will buy the first one. I'll buy the first one. So here, for example, I recommended buying the 23.75 puts, right, on Friday. So I will buy the first. I will buy basically the first stop where I think the markets will pull back. I will buy the first stop, not all of them, because I don't think all of them will be filled. Unless I see when the first stop breaks, I will take profits on those and then roll them down to the next stop. That's your answer. I don't buy each of them. That doesn't make any sense. I'll buy my first pullback stop where I think the markets might retrace to, and then see how the market behaves at that level, take my profits, and then roll them down to a lower stop. Do you understand what I said?
Yes.
I'm not gonna, you see, the reason, that's a good question. I'm not going to buy each one of those stops because I don't know if it's going to go to one of those stops. You know, it's not, there's no guarantee it's going to go to one of those stops. Market could be very strong. I've been burnt on puts before. You know that. You know, trying to short a uptrending market is like a dangerous game. This is not a bear market. Once and for all, if we have an intermediate bear market starting, I think that's going to happen more like around September, October. We can maybe buy puts and sit for 2 weeks, which I would love. But every time I do that, and I thank God I don't do that much, and I get burned because the markets are there's so many shorts in the market still there that they keep on getting singed, right? Look at George Soros, the big-time socialist billionaire. The guy keeps on ratcheting up his bet. You read that, right? He keeps on ratcheting up his bet against S&P 500, and he keeps on getting burned. It's like Jim Chanos trying to short Tesla, trying to short every move on Tesla. He's getting burned. So then these big shot billionaires are shorting the market, or not big shot, but this guy. You know, Soros is a hardcore, you know, borderline communist, socialist. He's a socialist. He even says that. So keeps on shorting the market. He keeps on getting short squeezed, so it's difficult. All right, guys, this was a great session. Thanks for attending. I know I made a lot of good points. I do appreciate all your support. Stay focused, stay tactical, really work on your emotions, and do what you need to do. God bless the USA.
Frank,
yes, go ahead.
Yeah, if you don't mind, if you could look at Qualcomm letter and just post it on Twitter. I was just trying to make a confirmation. I think it's going to like the 60s.
What stock?
Qualcomm, QCOM.
Oh, you mean Qualcomm?
Yeah, Qualcomm.
Oh, I thought you said Viacom. Hold on.
No.
All right, let's see here. Okay, let's look at Qualcomm. Let's look at the daily first to get a view, because I don't really trade Qualcomm. And the daily looks pretty fantastic. The 150-day moving average is, 60. Right there. It's a very powerful shape. Thanks for bringing it to my attention. As you can clearly see, it's a very large W. 60 is the first stop, and a possible breakout towards the neckline, which is, well, this is the neckline, really. So above this, it has a fair shot to get up towards 68. Now, keep in mind, Qualcomm is a stock that is held hostage to a lot of litigation news, right? And the fight between Apple and Qualcomm, if it gets ugly, you know who's going to win.
Apple.
Thank you very much. So the stock otherwise is looking good. This was obviously a huge buy point. Fantastic looking. Let's look at the weekly to see what's going on. And the weekly is also looking damn good. So we know what this is telling us. That Apple is going to basically, like it always does, settle with Qualcomm's. Qualcomm's going to say sorry, and Qualcomm's going to go higher and remain an Apple supplier. Remember, Qualcomm said they would put in a litigation to stop, what's the word I'm looking for?
Cells to come of their new iPhone.
Yes.
They're going to block the
import of iPhones. I laughed. I'm like, yeah, right. But this happened before, where a judge actually in California said, yes, so I'm putting an injunction. That's the word I'm looking for. Injunction against iPhones. Like, oh my God, this is a very positive chart. You do have 59 in the marks. We'll certainly put this up on the trading alerts on Monday. This is a good looking chart. Yeah, thank you. There are some negatives here with the moving averages starting to slope down, but this is positive. This is positive. This is certainly positive. 4 days of solid buying. First real candle over the mid-Bollinger. At least a kiss of the 50-day moving average. Rejection of the 50-day moving average might cause a sell-off. There is a gap here. There's a gap here. So this is the point of can it go up or will it fail again? So we shall see. Have a great weekend, guys. Beautiful day out here. God bless the USA. Absolutely historical event happening in the Middle East with President Trump. And I think it's a very, very powerful and great visit for all of the United States of America. All right.
Thank you, Frank. Thank you, Frank.
Take care. Have a great weekend. Bye-bye.